got a chart that looks like that. And I'm sorry, but it just doesn't make sense to me. It just doesn't make sense. But anyway, I mean, you can you can just I mean, I just tend to use the simplest charting method possible. Just these three alone is all I really need to determine trend. Now, as you can see, we tried a little rally here again. We tried a little rally here. Volume did not cooperate. I didn't see, there's no big bar, there's no big green bar here indicating that people are starting to buy up shares like crazy. So this market is not ready to bottom out yet. It looks like there's still a good deal of selling pressure going on. As long as the difference between up volume and down volume is increasing, that means there's increasing selling pressure coming into the market. And it hasn't ended yet. It's a very steady decline. There's more selling pressure coming into the market, and that means prices are probably going to head a little bit lower here. Once we see a large green bar, if we see a large green bar in here, well, then maybe it could be the beginning of a new trend upward in the market, and the market could start to turn around. But, until we see that, then we don't really take any action. That's it for these three. I call this the happy family indicator because they're all real time. The last indicator I'm going to show you, which I actually have up here, but I didn't show you how to do this. I take the NASDAQ QQQs ETFs, and I take the QIDs. Now the QIDs, let me just show you what both of these ETFs are. These are two ETFs. The QQQs is the indicator, is the PowerShares Exchange Traded Fund for the NASDAQ. In other words, it reflects the prices of the NASDAQ 100 in an ETF. The NASDAQ 100 is a very interesting indicator because a lot of small players, a lot of people in the technology industry use that and like to buy and sell this index. And so it's more reflective, I think, of not professional money, but more of of individuals. And the QID is just the opposite of the QQQ. The QID is actually a ProShares ultra short of the QQQs. In other words, it acts in completely opposite direction of the QQQs. When the market's going up, the QIDs will go down. Like you can see today, that actually the QIDs are up for the day because the market is down. It's up $1.57 here. And the reason they do that is because sometimes it's very hard to sell short the NASDAQ 100. So instead of using the NASDAQ itself, instead of shorting the QQQs, they provided this ETF that allows you to just buy this if you think the market is going down. Very similar to the VIX in the fact that it correlates negatively with the market in general. So in other words, when this one's going up, the market is going down. When this is going down, the market is going up. And what I've done is, all I did was I set up my chart here by taking the QQQQ, that's a symbol, the four Qs, minus sign, the QID. And the goal of this type of indicator is to simply measure the enthusiasm, disappointment, or of the participants who are trading the Qs and the QIDs. So in other words, what I get is a emotional indicator, a sentiment indicator, by taking the difference between these two. In other words, my reasoning is that when people are buying the QQQs, you're going to see prices spike up. Because what will happen is people will ignore the QIDs. They will buy the QQQs if they think the market is going up. When people are buying the QID, prices will decline rapidly, and it's an emotional buying. Then they will ignore the QQQs. They will go ahead and buy the QIDs as a substitute from shorting the market. Because people feel, in general, they feel more comfortable actually buying something rather than selling it short. to some people, selling stock short is considered to be extremely dangerous or something like that. It's not, but they feel that there's more risk in selling something short, so they wouldn't short the QID. They would actually go out and buy. They wouldn't short the QQQs. They would go out and buy the QID rather than short the QQQs. And so it kind of gives me an emotional indicator of what people. And remember, since this is on the NASDAQ, it kind of gives me a general feeling for the emotional state of the market. Now you can see the way I have this set up is that I trade and I follow the overnight sessions. The overnight session is in this light blue area right here. And right around, I guess it was about 8:30 this morning, trading started opening up around 7:30, I guess, this morning. And it does every morning. But it started going up a little bit. There was a little bit of enthusiasm here. It looks like things were really positive, especially after the day we had the day before. We went up 217 points on the Dow. But then all of a sudden, when some negative news came out, wow, look at that down bar right there. Look at that down bar. Those really long red bars are an indicator of emotional pain. And that emotional pain is translated into prices. And it kind of sets the tone for the rest of the day. When you see those large red bars like that, you get a feeling that people are extremely nervous. They're nervous about prices declining, so they're selling. They're actually buying the QID in this case because that's what we're tracking. If you had, in order to track each one of these different symbols, the QQQs and the QIDs, you'd have to have two different charts open. But because the TOS charts allow you to do pair trading in this window, I can put both the QQQs and the QIDs on the same chart and then measure the buying and selling pressure of those indexes, of those ETFs. So when I see a long bar like that, I had a feeling that the market was going to sell off dramatically today. And in fact, even if you hadn't gotten into a position early on in here, you could have waited till the market open. It did trade up for about 10 minutes before going back down, and you could have established a short position at that time and profited from this move down. It